ready, Steve? Uh-huh. Andy? Yeah! Bert? Well, all right, fellas. Well, let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Thursday, 13th day of May, 2021. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. It also gives you access to the chat box so that you can ask questions and participate in the discussion. On the days you're out of your office, away from your desktop, not to worry, just point any internet-connected browser to cfrn.net/live. There you'll find a live, real-time simulcast of the show as it unfolds. You just won't have access to the chat box. We also stream live each day on our YouTube channel, which is youtube.com/CFRN. Easy to remember. We also archive each and every daily show on our YouTube channel. Currently, there's over 1,700 daily shows archived for your viewing and educational pleasure. So let's open with a word of prayer. Heavenly Father, we praise and thank you for this day. We thank you for your blessings, your mercy, your grace. You've given us another opportunity to appreciate life and to fulfill our mission as your instruments of peace and progress. Please forgive us our shortcomings. Help us to amend our discretions. May we learn to pattern our lives through the example of Jesus. We pray, God, that you would bless all of our endeavors, especially today's broadcast. Guide us in our discussions, enlighten our minds in every decision that we make. Give us your grace that we may effectively do our parts as public servants. Bless our plans, programs, and projects so that we may achieve your objectives for your glory. And we ask this all in Jesus' name. Amen. Amen. Okay, happy Thursday. Hope it's a happy Thursday wherever you are. Let's take a look at the numbers from around the world. These are the cash markets, or the indices as they're called. Currently the Dow up 421 points. That's a gain of 1.25%. NASDAQ up 75. S&P 500 up 44. That's a gain of a little over 1%. The Russell 2000 up 18. That's a gain of almost 1%. In the commodity basket, crude oil is down $2, trading 64 even last. That's a drop of a little over 3%. Gold up $2.60, trading 18.25.40 last. Silver down 16 cents, trading 27.07 last. In the Asian markets at the close, Nikkei dropped 699 points. That's a drop of 2.5%. Shanghai fell 33, almost 1%. And the Hang Seng fell 512, almost 2%. And in the European markets today, FTSE down 41, the DAX up 49, and the CAC up 9. That gives us a red day in Asia, a mixed day in the UK, and so far it is a big green Radio Thursday here in the US of A. With that, we'll go to Michael and get a recap of what happened this morning in the live training room. If you're ready, Michael, you can take it away. And if you're not quite ready yet, we'll jump over to a daily chart of the S&P. Now, this chart is the entire move up, which began back here November 2nd. October 30th was when we put in the low, and then the rally began November 2nd, and then price got back above the BBC, and we held the pullback, and we held the pullback, we held the pullback, just barely held the pullback, and then we held it, and again just barely holding on. One more dip, and then this last big run that we've been on has taken us up to a new all-time historic intraday high at 42.38 and a quarter. We've traded back below the BBC, and today is our first candle opening below the BBC, and if we close below the BBC today, then that could take us to the 24% fib retracement of this entire move, which is basically the price of 4,000. Now, we've rallied strong off the lows, and that strong rally came off this 50% Fibonacci retracement of just the last leg up. Now, by the last leg, I mean the move that started March 25th to the new current high. And if we come over here, we can find March 25th. That's this leg, just the last leg up. We've retraced to the 50% fib. We've bounced almost back up, almost to the daily BBC. Let me refresh this chart. So we've got the daily BBC overhead at 41.40. We've got the 38% Fibonacci price extension. We've got the 24% fib retracement. We've got red and falling. We've got the step line. So if buyers can rally us up into this area, and we're almost there. In fact, we've reached this important area here where we put in a daily low, another daily low, another daily low, and here and here. So we've retraced to this important area of support. Will it now become resistance? On the first move up, we backed off. So we could see some sideways consolidation as our indicators come down to meet price, and that could then of course lead us to another leg to the downside. For all that to change, we need price to of course rally up above the BBC, above the step line, above red and falling, and that would put us in this area, and we would have an opportunity to rally back up to the 50% Fibonacci price extension and the all-time historic high. And I believe I hear Michael in the house.
Yes, I'm here.
Alrighty.
I am
If
here.
you're ready, you can take it away.
Okay, I will grab it. Then, and right here. Now, let's bring this up. And I'll slide that over.
Okay.
There we go.
Gotcha. All right. All
All right.
good. It's all yours.
All right, here we go. Good afternoon, everyone. Today is Thursday, the 13th day of May, 2021. All right. If you have not taken a free trial with us and you want to, go to the homepage at cfrn.net. Scroll down where it says free 5-day trial, no credit card required. Click on that, and it's going to bring you to this page, eminitrainingschool.com. On this page, all that we ask for is your name, your email, and your phone number. Tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button and you'll be sent a confirmation link. You must click on that confirmation link. Okay, if you don't click the link, we don't know that you took the free trial. So you got to click on that link. Now, the recap. Okay, if you're going to read the spreadsheet, you read all the CFTC risk disclosures down at the bottom. Today is the 13th day of May, 2021. Today we lost 8 ticks in crude, we lost 2 ticks in gold, and we made 40 ticks on the ES. Put us up $400 a contract on the morning session. And today it took 8 minutes and 3 trades to get to the goal for the day. At that point, we're up $250 a contract, and we took a total of 25 trades this morning. So on the month now, we're at $5,647. That's over 9 trading days, averaging $627 per contract per 2-hour trading day. So far this year, we've gotten our goal on 90 out of 91 trading days. And on the year now, we're at $68,680 a contract. That's over 91 trading days, averaging $754 per contract per 2-hour trading day. Okay, let's get into the trades. I'll start out with gold. Okay, now we had quite a few trades on gold. We had quite a few trades overall today. I think we took 20-something trades today. So it was plenty of action. Now, sadly, a lot of it, between gold and crude, a lot of it was stopping out. But our first trade here on gold, we stopped out. It was a momentum long trade. Actually, it wasn't a momentum trade because the entry was below the MA1. That's why I didn't have a break even there. Stopped me out. Then we had a break even. Then right over here, we picked up a couple of ticks. At this point, we're at -6. Then right here, we picked up 4 more ticks to put us at -2. Then right here, we picked up 11 ticks to put us at +9. Then we stopped out again, put us down to +1. Then right here, we picked up 1 more tick to put us at +2. Then we missed a trade there. We missed a couple of trades there and 1 there. Now, these would have been nice profitable trades. This one would have been break even. This would have been a nice profitable trade. Over here, we had another break even. Then we had a +4. That put us at +6 on the morning session. Then we stopped out 1 more time. That put us at -2 on the morning session on gold. Let's see, we get into the break right here, and it was just choppy during the break. There was 1 long trade right here that went about 6 or 8 ticks, and that was it during the break. It really settled down during the break. All right, now crude oil. We didn't have too many trades on crude today, and it kind of whipped us. Whipped me anyway. We started out here with a break even. All right, well, it would have been a break even had I taken it, and this probably would have been 2, maybe +1 or 2 ticks. This would have been plus about 4 or 5, but I missed all 3 of those. I grabbed this one for a -8. I missed that, which would have been a break even. I grabbed this one for another -8. I was -16 at that point. Then right here was a shorting opportunity that I missed that would have taken a while, but it did give some profit. Another break even. Then over here I had a +8. So at this point I'm -8 on the morning session. This area that you see right here is a weekly trading zone on the crude oil, and you can see how market came back to it and kind of got stuck in it here for a little while. There was a nice shorting opportunity here that I missed. Now it was going to the areas that I was thinking it was going to go to. Sadly, some of the times were on pullbacks where the areas were just beyond where the stop would be. But, well, anyway, that was where we ended the morning session. We ended with -8 ticks on crude oil. There was another short here. It would have been a really nice short. I was looking for it to get down here, and it went right through it. Then there was another one right here that would have stopped you out, pulled right back up to that pullback area that I had highlighted. Then it went down a little bit, enough to get your stop off if you had not stopped out. And then it pulled back up again to the next pullback area that I had highlighted. It pulled back up to that, and then this is all right here during the break. There was a shorting opportunity there and there. All right. Now the ES, we had some fun with the ES today. Finally getting to something that was fun to trade. Let me scroll all the way back here. Okay. All right. Here we go. The first trade on the ES was right in here. I didn't get into that, but it went right to the area that I thought it was going to go to. The next one was right here, and on the ES, we missed that one. Then we picked up 4 ticks on this one to get us to +4. Then on this one right here, we picked up 20 ticks to get, not 20 ticks, 16 ticks to get us to +20. Then here we had a break even, missed a trade. Both would have been break even trades. Picked up 4 more ticks, 6 ticks here to get us to +26. Missed a trade. There's somewhere in here that I missed another trade that was 2 ticks to get us to +28. And this one right here was another 6 ticks to get us to +34. And this is 6 more ticks to get us to 40. And the break even trade there. And then getting around 11 o'clock here, it had a nice run up right up into this weekly trading zone. Then it sold off completely from the weekly trading zone, giving a short here, a short here, a short there, a short there. Yeah, not one there though. And the cycle was going up too steep on that one. Then we have some more trades in here that I don't account for. It was a 10 tick trade to get us, we were at +40, I think, and there was a trade here and a trade here and a trade here that I didn't account for at the end of the morning session. This was positive, this was positive, and this was a break even. So we ended with plus over 40, but I accounted for 40 of it. Let's see, over here, we tested the BBC with a down close. That was a shorting opportunity during the break. This right here was a shorting opportunity during the break. This right here was a long opportunity. So was that. And this was a short. This was a short. And it flipped around and went long again. Long off the BBC right there. Long off the BBC right there and there. And a long right there. And that was it. So it gave a bunch of opportunity during the break today. Wow. Yes, it was a lot of fun today. All right. So if we scroll back here a little bit, if you're going to read the spreadsheet, you could read all the CFTC risk disclosures down at the bottom. Today is the 13th day of May, 2021. We lost 8 ticks on crude. We lost 8 ticks on 2 ticks on gold. We made at least 40 on the ES, and that put us up $400 a contract on the morning session. Today we had, yeah, between those other trades, there was another 18 ticks. Today it took us 8 minutes and 3 trades to get to the goal for the day. At that point, we're up $250 a contract, and we took a total of 25 trades. So on the morning session, we're up. I'm not on the month. We're up $5,647. On the morning session, we're up 400. That's over 9 trading days, averaging $627 per contract per 2-hour trading day. On the year now, we've gone 90 out of 91 days of getting our goal, and we're at $68,680 a contract. That's over 91 trading days, averaging $754 per contract per 2-hour trading day. Okay. Now, if you've not taken a free trial, go to homepage at cfrn.net, scroll down to where it says free 5-day trial, no credit card required. Click on that, and it's going to bring you to eminitrainingschool.com. On this page, all that we ask for is your name, your email, and your phone number. You can tell us your biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button and you'll be sent a confirmation link. You must click on the confirmation link, okay? If you don't click the confirmation link, we don't know that you took the free trial. Okay, so you got to click on that link. All right. Well, that's it. That's it. And look at crude oil taking a big dive right here, down to the new lows of the day. All right, so with that, we can pass it back out to Studio A in fabulous Phoenix, Arizona, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I am ready. Recap of the recap.
Today, it took 8 minutes and 3 trades to get you $250 a contract.
Good job. I heard they got the pipeline fixed, I think. Maybe that's why crude has come off. But the gasoline situation was getting pretty desperate in some cities,
yesterday you mentioned
some states.
Yeah, you had asked me yesterday about the gasoline prices. Well, they're up to $3 now. I was
we were
driving,
over $3 here.
Yeah, well, we were at $2.75, and then yesterday I filled up my tank. I filled it up for $2.89, but I know that that's going to be up to $3 today because the gas station right down the street had a tanker at it, and they were at $3. So,
well, there are lots of cities where lots of gas stations. I think South Carolina was one where basically none of the gas stations had any gas.
Yeah, that's the case here, really. I mean, I was lucky to find the one that I did, and I just had a little bit of a long drive, and I was just looking at the gas stations as I passed by them to see if they had any gas, and I found one that did. So I just.
So what were the ones you passed by? They have signs hanging out. We have no gas.
No, that you can just see the pumps are all covered up.
Oh, I see. We back when Jimmy Carter became president, we had the big gas shortage here in America, and there were long lines of cars. Sometimes a mile long, or even more people waiting at the pumps trying to get gas. And so I'm starting to think the Biden presidency may resemble the Carter presidency in more ways than one. And Jack just typed into the chat box, Colonial Pipeline paid the hackers $5 million in crypto ransom hours after the attack. Someone asked the president's press secretary the other day in one of her daily sessions what the White House was recommending that Colonial Pipeline should do, pay the ransom, not pay the ransom. And her reply was, Colonial is a public company, so we're going to leave that decision up to them. But, as a nation, our stand has always been is we don't negotiate with terrorists. And this is, while they call it a ransomware attack, it is also, in fact, a terrorist attack. So they paid up, and the juice is back on.
Yeah.
And that's got to be very concerning should be very concerning. Don't want to scare people, but if, bad actors in some other land, or we don't even know, they could be right down the street from, for all we know, they could be inside Colonial Pipeline. But somebody with a keyboard somewhere was able to shut down this infrastructure that is so important to America functioning. I mean, next time, is it the electrical grid? I mean, who knows? So hopefully the smart guys, the tech guys, the ones that know how to deal with all this are figuring out how to prevent these ransomware attacks. And everyone on your own personal home computer, there's different types of antivirus software that promise to protect you against a ransomware attack. So, of course, you can back up your computer. You can create a mirror image and store it somewhere else. There are precautions that you can take and that I think everyone should take. Obviously, the hackers are going to go after someone who can afford to pay a large sum of money. But smaller computers on home networks are also more vulnerable. So while there's guys out there, running this ransomware looking for a $5 million payday, there's probably many hackers around the world that would be tickled pink with a $500 payday or a $5,000 payday. So be careful out there.
And this could just be the beginning.
Yep.
Really. They paid up, so.
Yeah, and that right there, that sends a signal to not only the people who created this ransomware, But all the other folks out there who are black hat hackers, oh, so now the new status quo is that companies will pay. So, I mean, they've hit hospitals before. I'm just amazed that our white hat guys have not found some kind of way to prevent this. My understanding is that this was triggered from inside, maybe not orchestrated from inside, but triggered from inside. In other words, somebody inside of the Colonial corporate structure network clicked a bad link on an email or something to that effect. Now, I could be wrong, but I believe that's how I heard it explained. So, in any email that you get, even if it looks like it's from your brother or your mother, make sure it's really from them. If anything looks unusual, don't click it. If you get an email from somebody that says, hey, check out this video, or check out this link, and that person doesn't normally send you videos and send you links to check out, be very, very cautious. And look at the return address. For instance, I'm sure Colonial Pipeline has got a website, colonialpipeline.com, but one of the things that's frustrating is these internet registrar companies will allow someone to register info.colonialpipeline.com for, you know, $8 on GoDaddy. And so if you get an email, if you work for Colonial and you get an email from info.colonialpipeline.com, chances are you're probably going to click it, and that needs to be fixed. I think that's a big problem. Okay, doke. Well, good job on the morning session. Logic 247 this week. The markets have been extraordinarily kind since Sunday night at 6 p.m. Eastern through today at 11:05 a.m. We've issued a total of 47 alerts, 2 never triggered. We're all caught up, not waiting on the results of anything. We've had 45 actionable alerts, of which 2% got stopped out based on not risking more than $300 per contract per trade, less when possible, using market structure and the simple 3-step method that we teach all of our traders. Now, an average week, we'll see 20% of actionable alerts stopped out. So 2%, that is a bit of an anomaly, and the week's not over yet. We still have the remainder of today, and of course, all of tomorrow. Now, the individual alerts, I went through them in detail yesterday, but we'll just scroll through some of the ones from last night, because I haven't put anything out today because the markets did do a reversal on us, and we have certain criteria for a high probability, low risk trade setup, and I'll show you when we go to the charts how the markets are positioned. Oh, and I also did this, guys. I said I was going to do it the other day. You'll notice I've got my tabs back, so I don't have to jump from chart to chart. I can just go to the ES. Oh, wait, there's a window of opportunity right there while we're looking at it. In fact, let's put an alert out today. This will be alert number 7497, ESM21. We want to get above these highs here. Okay, we want to get above that blue and climbing, so 41.18. Initial target 41.20, and then the final target, of course, is the weekly trading zone overhead at 41.21/41.22. Okay, so now let me copy that over into the trial channel. There we go. Okay, so here's what we expect. We know that when price gets directly above, that when blue and climbing gets directly above. See how price climbs the back of blue and climbing? walks right up the steps. This is perfectly structured for a long. But now that price is got beneath blue and climbing instead of beside it, that has the potential right there to be resistance, roughly 41.14. So we want the market to prove that it can overcome that potential obstacle, so we'll take 41. Now if you want to be more aggressive, you could come in at 41.16 or 41.17. For the purpose of the alert, I chose 41.18 to 41.20, and then the weekly zone at 21/22. Okay, so this is what that looks like in the channel right here. So this morning we had a long on the NQ. I'm sorry, short on the NQ, short on the Russell, short on the Dow. This was overnight. A short on the S&P, short on gold, short on the S&P, short on crude, short on the ES, short on the Dow, short on the Russell, short on the NQ, short on the S&P, short on the Dow, short on the Russell. So that's everything that was issued May 12th, yesterday, up until midnight. Now, since the ES is giving us an opportunity, let's take a peek at the Dow. And the next weekly trading zone for this week is up at 34,230. And so we'll create an alert, number 7498, YMM21, to be long, 340.20, with an initial target 34.040, potential resistance 34060, and then potential resistance at 34,150, and the weekly trading zone at 34,230 / 34,235. Okay, that's in the channel, and we put it in the other channel. Okay, and this is what it looks like in the channel. Alert number 7,498. The Dow, consider being long, 34,020. Initial target is always $100 per contract traded, except the NQ, because it's so volatile, the initial target's $200 per contract traded. And then potential resistance at 340.60. We can get through that resistance, then potential resistance here at 34,150, and then the trade to target, the weekly trading zone overhead. We'll see what the Russell's doing. Okay, the Russell is just coming off a pullback, and it would need to overcome the step line, 2162, and then we've got the CTA at 66. So I think we can do that. Alert number 7499. On the Russell, want to be long, 2164. Initial target 2166. Potential resistance 2184. potential resistance, 21.95. And then we've got a weekly trading zone, 2208/2209. Okay, so I'll copy that into the other channel. Okay, and so there we go. There's the Russell. Observing long, 2164. Initial target, 66. We've got blue and climbing directly overhead. Now, in order to trigger, we want to get above the step line because that's potential resistance. So we've got a 2-point window of opportunity from 64 to 66. Potential resistance. And then potential resistance here. Potential resistance up here. And then the zone. If this trade can go from the entry at 64 to 2208, that's roughly 40 points plus. At $50 a point, that would be a $2,000 per contract move if price complies with the alert. Of course, we don't know what's going to happen next. With our methodology, our strategy, our indicators, we don't know what will happen next. Nobody does, no matter what they tell you. But we always know what the next high probability move is. Now, as long as we stay above the BBC, we anticipate higher prices. If price were to collapse at this resistance and take us below the BBC, we've got potential support right where this bullish cross took place. So if price were to come back to the BBC and trade through this potential support area, then we would have a window of opportunity on the short side down here. Okay, so let's peek at the NQ real quick. NQ. Okay, we can turn that into an alert. Alert number 7500. NQM21. Now we don't have a lot of room to work with here, so we need to get above that weekly zone at 60.61. So looking across the field, 13,184. Initial target 13,194. And then potential resistance 13,210. Potential resistance 13,296. $13,329. And then again $13,370. And the final trade to target would be the weekly zone at 13,465 / 13,466. Copy that into the other channel. And that's what this alert looks like. Now, just like what we saw on the previous market, if price does not overcome these, we got three obstacles. We got the step line, we got the zone, we got blue and climbing, which is directly above price, so that could now be resistance. So we want to trade, we want to initiate up here. If this red candle pulls back to the BBC and the pullback doesn't hold, and in fact trades through it, at the bullish cross here, we've got potential support. If price trades through that potential support, then we would have another alert come out to take advantage of this window of opportunity. Price flows on a 30-minute chart the same way it flows on a monthly chart, an hourly chart, a daily chart, 1-minute range chart, volume chart. It goes from support to resistance, back to support, back to resistance, back to support, over and over, again and again. It's a never-ending cycle. The weekly trading zones that you see on the chart, gray ones are this week, yellow ones are last week. You should think of weekly trading zones as fixed support and resistance for the entire week, because once we publish them Monday morning at 6:15 a.m. Eastern, as we have done since December 14th of 2009, they are carved in stone for the entire week. They do not change. So if price really flows from support to resistance and back to support over and over again and again, does that mean it's going to always hit a zone if it's trying to get to a zone? No. Perfect example. Price overcomes this zone, which means it's now trying to get to this zone, but it failed. Okay. But we always know which zone price is trying to get to. If price trades below the BBC, once it closes below the BBC, we know it's now trying to get to the zone below. And there is no weekly zone below, because 13,160 is the lowest weekly trading zone for this week. But you can see we found support here at the BBC and a previous weekly zone. This is potential support. This is a window of opportunity on the short side if the market decides to crater. If we continue rallying, this bearish cross is potential resistance. Okay. All right. So let's look at crude. Crude bouncing off a zone. Is that a this week's zone? 63.40. Yes, it is. So here price came down and hit the zone, bounced back up to the zone, back down to the zone, back up to the zone, back down to the zone, and now it's dropped to this zone. So one of two things will happen here. Buyers will drive us up to resistance, which is potentially red and falling in the step line, the zone, or the BBC. BBC, green line, stands for bull-bear cross. When price crosses above it, we're bullish. Below it, we're bearish. Above it, we anticipate higher prices. Below it, we anticipate lower prices. We always know what the market is trying to do based on our 30-minute chart, our fixed support and resistance, and our dynamic support and resistance, which are the indicators that you own as a CFRN passport holder. So I don't have any high probability trade here because I've got good support here. I mean, if price continues to drop and we get below this 63.40 and this old weekly zone, then we would have a window down here. Now, if we think price is going to rally up to resistance, I won't put out an alert on that because that would be counter trend. We can see that the trend is down. We define trend on a 30-minute chart using the BBC. That's how I do it, okay? That's how I teach all of our traders who are trading the alerts, who are trading the larger time frames, okay? So price comes down, hits this zone, we catch a bounce. To put out a long alert would be counter trend. Of the 7,500, I just published alert number 7,500. That's over 145 weeks. Every one of those is a trend trade as defined by a 30-minute chart and the BBC. Okay, gold is right at the CTA. And we'll talk about the CTAs here in just a second. From 1827, the first area that we would anticipate resistance on this chart would be this previous bearish cross. So let's do this. Alert number 7501, 7501. GGCM 21. Now, we already hit the zone 1, or the CTA once, and got rejected. Okay? You should look at the CTAs as daily trading zones, really. That's kind of how price behaves at CTAs. Now, this CTA is only good for today's session. Okay? The CTAs are published shortly after the Globex Open, good for the entire session. And this session, even though the line stretches back, you want to look at the vertical line and everything to the right. So we touched the long CTA, we touched the short CTA, and we spiked just below it a little bit. We spiked down to 1808.40. So there's about $60 in there. Basically, price was rejected, just as it was rejected here. Now, only 3 things happen at a weekly trading zone, and if CTAs are like a daily trading zone, well, that same rule applies. One of 3 things will happen. So since we failed to get above it on the first attempt, let's do this. On crude, let's look to be long. Buyers can keep pressing. Be long 1829. Initial target 1830. And then potential resistance 1831. And actually 1830/31 is a weekly trading zone. So that's going to look like this. I'll show you. One moment. Okay. So on the go, 1829 to 1830, because the weekly trading zone is the trade to target. So now that's only 1 point, $100, right? So you have to use the 3-step method to find your entry that allows you to risk only $100. You can never risk more than the potential profit in a trade. How do you determine the potential profit in a trade? The distance between the entry and the final target. Entry and final target. You do that math, that's the potential profit in the trade. Doesn't mean it's going to go there all the way to the final target, but that's your potential. Now, as long as there's at least $300 of potential profit, then we're willing to risk up to $300 per contract, per trade. But we want to risk less when possible based on market structure and that simple 3-step process. And it looks like we've popped up now to 1829.1. Okay, and the target is at 1830. So we'll pop back in a minute and have a look. Silver. Okay, silver climbing above the BBC, so that means we anticipate higher prices. The area we would initially look for resistance is here. Now, this isn't a bearish cross, but it's still an area that I would anticipate resistance. So I'm not going to do anything with silver right now. And I'm not going to go the other side of silver because then we've got, again, potential resistance right there. Now, 2 pennies is $100. So yeah, 27.26, you know, to 27.29. There's room to navigate there, but it's a little too close for my taste. Okay, back to the big picture before we got sidetracked, because again, the alerts are published as opportunity presents itself. The logic alerts. The logic alerts come out around the clock, 24/7, starting Sunday night at 6 p.m. Eastern, all the way up until Friday afternoon at 5 p.m. Eastern. An alert could come out at 2 a.m. or 2 p.m. Our day session is the UK's night session and vice versa. Globex opens each night at 6 p.m. Eastern. Then Asia opens, then London opens, then Wall Street opens. And so this is the Thursday session, but today, this afternoon, at 5 p.m. Eastern, the markets will close, and then at 6 p.m. tonight, the markets will reopen, and that will become the Friday session, even though it's still Thursday night. So we know that the 24% fib retracement, the shallowest possible fib retracement of this entire move up that began November 2nd, is down here at 4,000. What happened on the way to 4,000 is on the last leg up, we hit the 50% Fibonacci retracement, and wow, what a bounce. We spiked that 50% fib a bit, and from 40.40 we bounced up to, we bounced as high as 41.23. From 40.40 to 41.23, that's about an 80-point bounce. That's pretty huge. Okay, all right, now, so we know where we're at with the logic alerts. Let me bring up the CTAs. If you want to grab a screenshot, you can do that. Dr. Ty, it's Thursday, so Dr. Tom should be joining us here momentarily. Got the alerts out last night right at the open. Two numbers for each market. Best way to handle it is, for ES as an example, go put a line in the sand at 4,100. Put a line in the sand at 40.38. If price starts trending up to 4,100, that's bullish. So our strategy, logic, will be looking for opportunities to buy the dips on the way up. If price starts trending down to 40.38, then logic will start looking for opportunities to sell the rallies. So put a line in the sand for each of the markets that you trade. Okay, and we'll go through those. And so again, I fixed my chart the way it's been for years. All of my tabs got undocked, and so I spent a little time bringing them back. And it just makes it so simple to go from there to there to there. Now, CTA last night on the ES, on the short side, it was 40.38, and we dropped to 40.29 1/4. So we'll call it 40.30. We'll round it up to 40.30 to make the math simple. That's an 8-point drop at $50 a point. It's $400 per contract traded. The long CTA was 4,100. We traded up to 41.21 weekly trading zone. The trade 2 target on a long is the zone overhead. On a short, it's the zone below. Obviously, we didn't make it all the way to the trade 2 target. On the short side, on the long side, we did. And we talked about price finding potential resistance at blue and climbing, okay, which it just did. And so that's why our entry for our long is up above blue and climbing. We need to overcome that obstacle before we get triggered in. So we had a 21-point move here, 20 points at $50 a point. That's $1,000 per contract traded. If you've earned the right to trade 2 contracts, it's $2,000. You've earned the right to trade 3 contracts, it's $3,000. Okay, just basic function of math. When you first get your passport, we don't want you trading live. We want you trading in your demo account, in your simulator, as you learn the trading strategy. It's very important. You don't want to throw real money at the market until you understand the strategy that you're going to be trading. So in your demo account, we want you to put together 10 consecutive days in a row where you reach your goal in 10 trades or less. Once you do that, the blueprint will give you the green light to go live with just one contract. You'll trade that one contract until you increase your account balance by $2,000. Then you get the green light to go live with a second contract. The second contract is being added with profit you earn trading one contract. The blueprint will always notify you when it's time to add another contract based on the calendar, but you only add one at a time, and you only add with profit you earned in the market. Once you go live, anytime you have 2 consecutive days in a row where you do not reach your goal in 10 trades or less, you immediately hit pause on the live account, go back into the demo account, book a one-on-one mentoring session so we can help you sort out why you don't have that profit available to add the next contract. Once that's figured out and you get your confidence back, then you step back into your live account right where you left off. Important prices, important areas are almost always tested. So while we only had one real trigger on the short side, we had another nice trigger here. Price got back below the trigger, and we put in a swing high at, oh come on, 41.14. So 14, market made 14 points available at $50 a point. 21 available on this trigger, 14 available on this trigger. Okay, now price is dipping back below the trigger. Will it find support at this low, or will it drop all the way to the BBC? Don't know. What we do know, sellers have control at the moment because we're printing a red candle. If buyers don't step in this area, then most likely we will drop to the BBC. We won't put out a short alert though, because that would be counter trend. We'll wait for price to find support. It found resistance, then it found support, then it found resistance. Now it's again looking for support. If the support comes here, great. If the support comes here, great. If we fail to find support in any of those areas, right where the bullish cross took place, that's potential support. And if price can trade through that, then we've got a window of opportunity down here. Okay. On the Dow, CTA last night was to be long 33,836. We traded right up to last week's weekly zone at 340.60, which also lined up with this bearish cross where we expect to find resistance. Anytime you have a bearish or bullish cross that leads to an extended move, when price revisits that area, in this case we expect it to be resistance. If this had been a bullish cross and price revisited the area, we would expect it to be support. So things are doing exactly what we would anticipate. Now, I said the markets have been very kind this week on any given average typical week. The market, we know what the next high probability move is, but 20% of the time it does something else. Why? That's one of the great mysteries of the universe. But the answer is because order flow changes. We get into a long trade because there's more buying pressure than selling pressure. If the order flow shifts and suddenly there's more selling pressure than buying pressure and we're in the middle of a trade, the trade gets knocked out. So there's been good follow through this week. So we're printing red. Remember, we wanted to get above our obstacles, and so far we're just pedaling sideways. Here's the Russell. On the Russell, we came down to the short CTA and we spiked it down to 2113, swing low, 2112.6, we'll call it 2113. So that's 6 points at $50 a point. It's $300 per contract traded. And then the long CTA last night was 2166, and we traded up to 86. So that's 20 points at $50 a point. That's $1,000 per contract traded. Is this low really 2116? 2112? 2013? Yeah, it really was. Okay. So from 66 to 86, yeah, that really is 20 points. Okay. Now, why did the market stop here? Well, why did the market stop here? We always have to anticipate that previous resistance will be resistance again until the market proves otherwise. So we anticipate this area to be support, to be resistance, and it was. If price had gotten through this area, then this would be, this double top here, that would be our next area for potential resistance, and into the zone. Okay, this is as far as we made it. However, the market did make $1,000 per contract available. On the NQ, price marched right down to the short CTA, and it got rejected. Remember, only three things happen at a weekly zone and a CTA. The most likely is consolidation. Second most likely is rejection. Third and least likely is the slice. Okay, so the long side was 13,120. Okay, and so we popped above it to 13,135. So that's 15 points at $20 a point. That's $300 per contract traded. And we got back below the trigger, and this time we put in a high at 221. So from 120 to 220, that's 100 points at $20 a point. That's $2,000 per contract traded. Now, every one of these alerts, every one of our members had the opportunity to trade these because they all got these alerts last night, all of these CTA alerts, at shortly after 6 p.m. Eastern, when the Globex market opened. Okay? Now, the logic alerts, which are based on current price action, come out around the clock. But the CTAs, based on historic price action, that comes out as that static report I showed you, issued once per session, but the numbers are good for the entire session. Okay, and so then we triggered again, and we ran up to from 120 to 147, so that's 27 points at $20 a point. However, on this trigger was beautiful. You notice how price is to the left of the step line line's to the left of blue and climbing. Here the dynamic has changed. Once that step line crosses over, then it becomes, in this case, potential resistance, and it was. As price tried to get through that step line, it drove us back to the BBC, and blue and climbing has now turned to red and falling. So we have a little bit of a bearish picture here. On crude oil, the CTA was to be short 65.35, and the initial trigger we dropped to 65.25, $100 per contract traded, and then we got back above the trigger, triggered again. This time we dropped from 65.35 to 65.10. That's $250 per contract traded. And then we got back above the trigger one more time, and that trigger led us down to this zone at 64.15. We bounced. We got our exit signal right here. The step line crossed over. We had a green candle close above the step line, so the closing price of this candle, 64.56. From 65, hey Dr. Tom, 65.35 down to 64.56. Now it's roughly 80 points, so that's $800 per contract traded. And then as you can see, we continue to trade lower all the way down to last week's zone at 63.25. Dr. Tom, welcome to the show.
Hey, sorry I couldn't get on early. I
No,
had
that's okay.
appointments.
No worries. No worries.
So you're a little short on time today?
Yeah, I mean, you know, we'll play it by ear. If you've got an hour's worth of talk, we'll talk it. But actually, if we can jump about 45 minutes from now, that'll give me time to wrap up and do the good word for the day, and then I'll be out of here at exactly 2 p.m. Eastern.
No problem. I can talk fast.
No, you don't. What do you want to talk about today?
Well, I want to follow up on what we were talking about last week about, how to get control of your own money.
Shall I send you the screens?
Yes, please.
Okay. You, sir, are the presenter.
I'm not going to let the power go to my head.
You'd be the first. Jesus didn't. Jesus never lets the power go to his head, but most everybody else does. It's part of the human condition.
Well, Jesus is the best.
Amen.
All right. How's it looking to you? Is it centered nicely and everything?
Yeah, it looks good. Speaking of this Jesus, have you heard that song, Elevation Worship and Maverick City Music collaborated? Brandon Lake is the lead singer on it. It's called Talking to Jesus. It's a great video. If you Google it, it's pretty good. Talks about how when he was a little kid, his grandmother used to pray out loud before she went to bed, and she taught him how to talk to Jesus, and now he's teaching his son how to talk to Jesus. It's really a beautiful song, and the video is well done. So if you just search YouTube, Talking to Jesus, it'll pop right to the top. Lots of good music coming out of that church in North Carolina, Elevation Church.
I've heard a lot about it. I've never been to it, but
Stephen Furtick's the pastor, and of course, anytime a pastor gets quote unquote famous, the bashers come out of the woodwork. They're going to find fault with everything from, what he says to the clothes he wears to even the shoes. There was a big article last week or 2 weeks ago that talked about all of the expensive tennis shoes that the members of the Elevation worship team were wearing. And so I thought, I wonder how much they make, because they are they're world-class talent. So I went to a website called Glassdoor Salary Reviews, and the average are the worship team members at Elevation earn a salary somewhere between $32,000 and I think $45,000 a year. And so $40,000 is $800 a week. Now, I'm sure many of them have their own independent musical careers. For all I know, some of them drive Uber, when they're not playing music at the church. So certainly the worship team members are being paid a decent wage, but they're not getting rich. And if they, choose to spend some of their money on a $800 pair of tennis shoes, well then, who's it for me to judge? And how do I know that, maybe some wealthy person gave them those shoes as a gift? I mean, who?
Yeah.
It's not my business to judge other people, and
I heard this pastor. He did like I did. I never took a salary from any of the 7 churches I pastored, and he didn't take any salary at all. But he drives a nice car that he bought himself. The church didn't buy it for him or lease it, and he doesn't get any salary. And he was being criticized for driving a nice car. I mean, judge not that you be not judged, right?
Pastor Chris at the orphanage in Uganda a wealthy donor in the UK bought and sent Chris a Range Rover. And
Nice.
boy, that just turned the city and the church and donors just on their head when they found out that this orphanage they'd been helping out, that the guy that ran the place, Pastor Chris, was running around in a Range Rover, a car more expensive than the car they, as donors, were driving. A lot of them became very unhinged, and there was an actual split over that vehicle. And I counseled Chris. I said, Chris, I believe that God blessed you. This person who has plenty of money who also gives to the church, who also gives to the orphanage. He chose to give you a personal gift because, he knew that you needed a new vehicle. But my counsel, and the counsel of some other members on the board, was that maybe he should let go of the Range Rover, which I don't know if that was the best counsel or not, but he said no, this person would be very hurt because they went to a lot of, not only expense, but all the paperwork and stuff that has to be done, to ship a vehicle and the taxes and duties. And this person went to a lot of trouble. They really wanted me to have this. I'm not going to insult them. And if people can't understand that God, will bless a person how he chooses to bless them, I don't know what to say. So, eventually, as the Range Rover got a few years on it, and a few 100,000 miles over these bumpy dirt roads and about 9 inches of dust on it, it's not an issue anymore. So,
Yeah.
what would
He
your
should have
counsel
just
have been?
painted.
Would your
I
counsel
would have
have
told
been-
him just to paint on the side of both of the front doors, donated, thanks to so-and-so, so-and-so who donated this Range Rover.
That's that right there. You could even get those little magnetic signs that stick on a door.
Yeah.
Yeah. Give that person
Well,
name recognition. Just like some of our dormitories at the orphanage, they have little signs above the door where you enter the dormitory that says, this dormitory built by so-and-so, because so-and-so sent money specifically for the purpose of building that dormitory. I mean, we do the same kind of thing here in America. You go to hospitals, you'll have a whole wing of a hospital named after somebody because they paid for it.
Well, I had a box of Q-tips named after me. So,
All right,
No,
you
I
want to
don't
talk mutual funds. Let's do it.
yeah. Actually, I just want to continue where I left off. I was talking about the 3 worst investments in the world, and the worst is annuities. But I talked about mutual funds first because they have such poor performance over the last 15 years. 92% of them did worse than the S&P 500. So you're better off with an index fund, and it would cost you far, far less, and you can put a stop on it. You can't do that on a mutual fund. So I'm just down on mutual funds totally. But I hate annuities even more because they invest in mutual funds. A lot of these guys that do financial advisement, they tell my listeners hear me on the radio or on webinars or whatever. They'll go to the broker and say, "Hey, Dr. Tom says we should diversify." Oh, you're already diversified. You've got, 5 different mutual funds and you've got an options portfolio, and of course you have an insurance product and an annuity. What they don't tell them is that the annuity, yes, is put out by an insurance company, but it all invests in mutual funds. So I dislike annuities even more than mutual funds because you still pay the mutual fund cost, which are very high, and you're paying big annuity commissions. And then people say, well, yeah, but they guarantee me so many dollars a month for life. I said, really? what's the guarantee? Well, the insurance company, they guarantee it. I said, yeah, but can the insurance company guarantee you they won't go out of business?
Yeah, right.
We don't see that happen very often, but AIG actually went bankrupt, biggest insurance company in the world. And so I said, unless somebody can guarantee you that their company won't go out of business, then their guarantee of payment is worth nothing, really.
Right.
So you need to get your money out of prison. And, I'm just basically kind of laying the groundwork for why you need to get out.
When Nixon unpegged the dollar from gold, if the wording of his statement was, I believe the U.S. dollar will no longer be based on the value of gold, but on the full faith and credit of the American people. Is that how it was worded?
Yes.
And to everyone's great surprise, the dollar actually strengthened. And he took this action because other countries were trying to manipulate our currency based on gold. It's a long story. Everyone should probably study it for history's sake. But the dollar was kind of in a free fall, and when he decoupled it from gold, it bounced. Now, that was way before my trading days, but you were a trader at that time in history, I believe. So is that your recollection? Is there more you can shed on that?
Yeah, it's funny you should bring that up, because coincidentally, I just posted on conservativetruth.org or .com, either one, Conservative Truth, an article called "Who Ended the Gold Standard?" because somebody had written into Christian Financial Concepts and said, I heard you on the radio say that FDR ended the gold standard, but I Googled, and Google, which is, full of lies, Google said that Richard Nixon ended the gold standard. So I did a whole article on it, but just to summarize it really, really quickly, the gold standard ended when Americans could not redeem their money for gold. You could redeem a $20 bill. It was right on the bill. It was an obligation to the government that you could redeem a $20 gold certificate for a 1 ounce $20 gold coin. Mm-hmm. So you've heard the expression "good as gold." Right. Well, that's what a gold certificate was. Today, the only thing the government has to give you for a $20 bill is more than nothing. You got worthless money.
You get a 10 and 2 5s.
Yeah, exactly. So what really happened was that the Bretton Woods Accords, it was a big meeting of I think about 30 major nations in 1944. They agreed to peg their money to the U.S. dollar because we had most of the gold in the world. And, how we got there is all a function of the war and how late we got into the war and so on. But anyway, we, took over Great Britain's place as the world reserve currency. And the idea was that our money would be backed by gold. But it wasn't the gold standard that we had before, where you had to have $1 in gold for every dollar you printed. It was what I call, gold standard light. It was only backed about 20% by gold. But we would have been fine, except they stupidly kept the official price of gold at $35. Okay? And as time went on and gold was trading in the free markets around the world for $100 an ounce, people that had U.S. treasuries, U.S. dollars and so on, other countries were coming and redeeming it at 35 and selling it at 100. Nice arbitrage. Before it was all over with, the world market price was around 200 an ounce, and they were still getting it for $35. So Nixon did the right thing, but he didn't end the gold standard because it had been ended a long time ago. I don't care if France and Germany can redeem their U.S. dollars for gold. When Americans can't redeem their own legal money for gold, then the gold standard's over. So what actually happened was he closed what they call the gold window, which was the ability of other nations to come and get gold at way under market prices.
Right.
So, anyway, read the article. It's interesting. Conservative.com. It's a very top article there. So, in the financial panic of 2008, most people lost 50 to 55% because most retirement plans were managed by these professional guys, and they handle the money in mutual funds because it's easy. It takes work to do what I did when I was a broker, which was research the stocks. I mean, I was in at 6 o'clock in the morning, long before the market opened, and I seldom left before 6 at night. And when I wasn't trading or talking to clients, I was doing research. So I selected stocks carefully. I kept track of them. It's hard to keep track of what I call the trading personality of more than around 10 stocks. So I limited myself to that, but I always had 10% stops on them. And because of that, I only lost 10%. And a lot of brokers did that. But most people had these so-called professional guys managing their money. And since they're all in mutual funds that you can't put stops on, and most of them are what's called 90-10 funds, where 90% has to stay invested and you can only go 10% to cash, the two tools that you and I would have at our disposal, market gets wonky, sell all our stocks. Mutual funds can't do that. When you buy a stock, you put a stop on it. Mutual funds can't do that. So even though the S&P only lost 32.2%, people's retirement accounts lost almost double that. So that's why I hate mutual funds. And I hate annuities because they invest in mutual funds. Okay, so I want to get down to, what you can do about it. I accidentally paused my screen there. So let me get back over here to where I can move it again. Gracious, where are you, mouse? There we go. All right. So, why? Well, I've already explained why. Good brokers do business a whole lot differently than the people who manage most all pensions, 401ks, IRAs, and so on. They tend to pick last year's best mutual funds. Well, I did a study on that, and over a period of about 30 years, the mutual funds that were in the top 10%, which is no great shakes. I mean, like I said, 92% of mutual funds underperformed the S&P 500. But if you just look at the top 10, that's what a lot of them do. They would pick one out of that, and then if they lose money, they just blame the fund manager. They don't take the responsibility for the fact that they picked a fund manager. But the interesting thing is, very seldom does any mutual fund that was in the top 10% last year end up in the top 10% this year.
That is so important that folks understand, because it's just natural instinct that you would go to some website where they rank, the top hedge fund managers of 2020, and whoever's at the top, scroll back to that same list from 2019, they probably aren't there. And then fast forward to 2021, they probably aren't there. I mean, every dog gets his day in the sun. But anybody can have a good year, anybody can have a bad year. But being, the hedge fund manager you want to look for is the one who, is not a racehorse and not necessarily a plow horse, but just sort of a steady eddy, some kind of, consistency, which is difficult to find in the markets.
It is. And in general, most people are better off just getting an index fund if they want to be invested in stocks, because they tend to do better, and the expenses are much less. Okay, retirement confiscation. Well, that could never happen in the United States, right? I mean,
Well,
raise your hand if you think that the U.S. government could confiscate your IRA or 401k or pension.
I got both hands
well,
up.
Yeah, both. Cyprus, they just took 50% of people's retirement funds, money they'd already paid taxes on, and just took it. And people said, why? And I said, well, we need it. Poland did what they call a pension overhaul. They just basically stole all the funds. Argentina confiscated public and private pensions and put it into their version of Social Security. Hungary gave citizens a choice, not much of one. Either turn in all your retirement savings and keep your government pension, or lose the right to your pensions. So it's happening all over the world. I mean, these are just a few striking examples. But Obama came out with this MyRA, and he targeted low-income citizens who typically are not very financially sophisticated. And the money was invested in so-called safety and security of government bonds.
And bonds, historically, typically, are the worst investment there is.
Oh, yeah. They're actually more volatile than the stock market when you look at the yields. And that's why people buy bonds, not for the principal, but for the yield. So I think out of the last 100 years, stock market's been down 33, and the yields on bonds have been down 42 years. Okay.
Didn't the yield on bonds go negative a couple of years ago?
I think so.
Yeah.
I know for a fact that in 2011, the U.S. lost its AAA credit rating,
Right.
and it's never regained it. So today, there are 12 nations in the world that have a AAA credit rating with all three agencies. They don't count it as being a AAA credit rating if you have it with one or two of the agencies. It has to be with all three. So there's about a dozen nations that have that AAA rating. We're not one of them, and yet we used to be the only one. Now this one you gotta love here, because the government is so efficient at running things and managing things. The U.S. Consumer Financial Protection Bureau is considering whether it should take a role in helping, in quotes, Americans manage the trillions of dollars they put into retirement savings. Do you want the government helping you manage your retirement money? I sure as heck don't.
No.
Okay. And a really scary statistic, if you put all the money that's in IRAs and 401ks together, it's just about the amount of the national debt. So imagine a pretend president saying, I'm going to pay off the national debt, and taking all our retirement plans and taking all those bonds that the Treasury owes and putting them in our retirement accounts. That's one of the plans they have. So they didn't pay off anything. They just put it on our backs. And yet they could say, look at me, I'm the best president ever. I paid off the national debt. The very next day, they would start spending more money than they're taking in, and we would start building the debt back up. But it would look good for a while. And if they would take the horrible step of stealing 40% of the wealth of the nation, of taking all of people's real money away from them and replacing it with Federal Reserve toilet paper, no question in my mind that when they feel the time is right, that they will take retirement plans. Democrats in the House have been actively conducting hearings on proposals to confiscate retirement accounts, and this is a quote from their paper, including 401ks and IRAs, and convert them to accounts managed by the Social Security Administration, which only makes about 2.25% a year. Every Democrat president since Clinton has worked to advance this plan of confiscating retirement plans. But this is even worse. Some woman that they hired as a consultant, supposedly an economist, has proposed that the government eliminate the tax deferral for private retirement accounts. So the little bit of tax break you get for contributing to your IRA or 401k would be gone, and then confiscate the balance of those accounts and give each worker a $600 annual contribution. So they take a $250,000 or $50,000 retirement account, and in return, which might even make it 10 to 15% a year, if you had it invested in gold, and then they give you $600 a year. Not a good trade. And then, good government, if they get involved at all in pushing people one direction or another, should push people towards savings, right? Towards thrift, because that's where the money comes from for mortgages. But they want to put a mandatory savings tax on money that you've already paid your taxes on, and then put all your retirement money in something called a GRA, a guaranteed retirement account, that would pay a 3% rate of return in an environment of 5% a year inflation. So you'd only be losing 2% a year on your money. Bloomberg, this is a few years ago, but is still true. Departments of Labor and Treasury held hearings on the next step toward achieving the goal of the GRA. They said they wanted to offer people the opportunity to an elected annuity. But you know what happens, once a certain number of people make that change, then all of a sudden it's not optional anymore, it's mandatory. And Bloomberg, which is not a conservative organization, particularly if you look at the owner, said the behind-the-scenes purpose, in other words, the real purpose for this was to get people used to the idea, listen to this, that their retirement assets they accumulated would no longer be part of their estate when they died. So the simplest thing that most people are familiar with is if you have a good-sized IRA, you've worked hard all your life, and you've faithfully put money into it, when you die, your kids inherit it. And they want to change that. They want to say, once you're dead, so is your IRA. We get all the money. So I'm not your financial planner, but I'm going to give you my thoughts on this. If you have a 401k, as soon as you leave your job, if you retire, quit, whatever, don't roll that sucker into the next company's IRA, okay? Once you get that money commingled, you can't unscramble eggs. So close it out. Either liquidate it, which is the smartest thing to do, and get it totally out of the government's control and in your hands, or roll it into an IRA the day you leave your job, because with an IRA, you have a lot more flexibility. If you're there, your money's stuck in prison in most cases. So if they match money, like they give a 3% match for every 3% you put in, and they do a 100% match, then do the match. But if they say, well, if you put in 6%, we'll put in 3%, I wouldn't even go for that. The 100% return is good because it makes up for the fact that the fund is not performing. But I've talked to people that are putting 20% a month or every pay period of their salary in, and they're only getting a 2 or 3% match. Do the match. You're making 100% a year on that money. But other than that, don't put a penny more, because once you put it in that 401k, you've locked it in prison until you're 59 and a half years old at the minimum. Look at various different ways that you can withdraw money from your 401k. Some companies have provisions that allow you to do that once you get to a certain age, or for certain things like building a house or medical bills or whatever. Also, not a big fan of borrowing money, but you can look into doing loans against your 401k, because it's not really a loan. You're borrowing from yourself. You have to pay interest, but it's usually, 4 to 6%, pretty reasonable. And you're paying the interest to yourself. And in the meantime, what have you accomplished? You have that money free to invest in hard assets that can make you serious money, or at least you protect it from confiscation, because whatever money you got out of that 401k, they can't confiscate.
That's true.
This thing is driving me nuts.
What's wrong?
If I click out of the PowerPoint, then the drop down doesn't work. I gotta just not touch the mouse. Okay. This guy, Ron Holland, is a very smart guy. Follow him. He has been right almost every time about what he said. And he didn't used to feel this way. He felt like it was a long shot that they would confiscate. But now, and it's very recently, he said there are a few issues I feel as confidently about as the likely confiscation of U.S. retirement assets. He lists all the different plans, even Roth IRAs. Such schemes were actively discussed in Congress during the global meltdown in 2008, global meltdown 1, as he calls it, and are sure to be reconsidered upon the commencement of the next major crisis, global meltdown 2, which will probably happen this year or early next year, whether it's from a U.S. ratings downgrade further, from maybe AAA down to AA or something like that, a terrorist attack, a military event, or a renewed economic meltdown. But then he goes on to say that's already ongoing, and there are potential flashpoints everywhere that can make it a full-blown meltdown and lead to hyperinflation. This guy is a smart guy. Pay attention. So nobody wants to pay taxes. When you pull money out of an IRA or 401k, you got to pay the taxes unless it's a Roth. So ask yourself this question: will taxes be lower next year? If you answer yes to that, you're probably smoking something you shouldn't be smoking. Biden has promised a 50% tax increase, but I believe it could easily be 100%. The reason I say that is, remember how he announced a capital gains tax increase, and then a month later he doubled the amount that he wanted to charge on capital gains. So I would not be surprised at all to see him take personal and corporate tax rates up much higher. A lot of times they'll just get you used to one thing, and then once you get used to it, they'll go harder. So today, maybe and probably is the lowest tax rates that you're going to see for the next 4 years. So if you wait and take your money out later, you're going to pay a lot more in tax. So, again, people challenge me on this. So a little research. Make a guess at the highest tax rate ever charged by the IRS.
Mm-hmm.
Anybody want to type something in? Do you want to make a guess?
The highest, I think it was 90%.
Exactly, 90%. Are you kidding me? 90%? Yep, 90%. That was FDR. Don't think that the government can't do that. It can do anything. If it can confiscate 40% of the wealth of the country, lawful money, which we had, our gold was the money of the U.S. government. according to the Constitution. If they can do that, they can do anything. Never buy gold in an IRA. One of the main reasons why you want to buy gold is for privacy. Do you want the government to know everything about your finances? Well, a teenage hacker can find out everything you own, every trade you make, every stock you own, insurance policy, whatever. But when you buy gold the right way, you buy it privately, it's just like buying a gun privately. They can't confiscate what they can't find. People say, well, hey, they'll go house to house, search you for gold and guns. Well, no, they won't. If they had an army 10 times the size that it is now, they couldn't search 150 billion dwellings. Okay? So don't put gold in the IRA because that's immediately registered with the government. If they go to confiscating the gold, it's because the stock market is tanking and they're needing revenues. So the first IRAs they will go after will be the gold IRAs, not the ones that are full of stocks that are going down. So buy gold outside the IRA, liquidate the IRA, whatever you have to do, use cash that you got, sell your hound dog, but get gold, but don't buy it in an IRA. So if you don't have a federal retirement plan, don't start one. I have people call me up all the time. Well, I'm thinking of starting an IRA. I want to scream over the telephone. No. If you already have one, don't contribute to it. Because remember, every dollar you put in it, you're locking up in a prison cell. Except for what I talked about earlier, the match money. But don't put a penny more than the free money you can get that you match. And get all the money possible out of these kind of vehicles to avoid confiscation and losses to inflation. Everybody's situation is different. I'm not a financial planner. I don't pretend to be. I used to have all the licenses. As most of you know, I was a financial planner for decades, but I'm not now. But if you want to have a chat with me about your situation, I can't give you investment advice, but I can steer you to where you get the right information and make your own decisions. And I can tell you, in some cases, what I would do in that particular situation. Remember this, if you don't remember anything else what I said today, there's no reason or benefit you'd have money in a federal plan. None whatsoever. And a lot of reasons you shouldn't. You're going to pay the taxes. You might as well pay them now, because if you pay them later, you'll be paying more. Now, I'm going to end here, but what I'm about to show here is for mature audiences only. So
Okay.
You might want to get any children out of the room, and if you're really squeamish, you might just want to turn your screen off for a few minutes. But this is something that most people don't know. I talk to sophisticated businessmen. I've even talked to accountants that don't understand this. I don't understand it. And they couldn't understand it, but it is what it is. If you invest $100,000, say in your trading that you're doing now, and you make $20,000 in profits, how much money do you pay taxes on? $20,000. Okay.
That's right.
You only pay taxes on the profits.
That's right.
Now, if you invest the same amount of money in an IRA and you make $20,000, what's the amount that you pay taxes on?
Oh, you'll have to tell me that one.
$120,000.
Okay, because the money that was put in was not taxed originally. Gotcha.
Yeah. So you made a deal with the devil, You said, give me this little pitiful tax return, and in return, I will pay taxes on all the money I invested, not on my profits, but on everything I put into my IRA.
Because then the thinking is I will be in a much lower tax bracket when I start to draw down on that money.
Right. And of course, that's not true, because they continue raising taxes, particularly since, Biden in less than 4 months has added more to the national debt than Obama did. He had the title for a long time. He doubled the national debt in 8 years, but Biden's put in, added more to the national debt in 4 months than Obama did in his first 4 years. Now, it actually gets worse. If you invest $100,000 in an IRA and you lose $20,000, you still have to pay taxes on everything that's in that account. That's 80 grand, folks, on money that you lost. It's crazy. So I've done this over and over again over the years. Used a financial calculator and calculated what would happen if you put the same money in an IRA and a private stock account, for instance, and made the same returns in every case. I say almost everyone because I suppose there could possibly be some other unusual scenario. But in every case that I've seen, you got way more after-tax money, on average 50% more by investing the money privately. So don't put money in the IRAs. So why should you take the exit? Okay, because almost all retirement plans lose to inflation. I wish to the Lord that I'd known this when I was a broker and recommending IRAs and 401ks. I have repented of that since then, but I can't go back and make it right, except to warn people for the future. Taxes are only going to get higher. There's no question about that. The danger of confiscation, the deeper we get in debt, is greater and greater. And as Dwayne teaches you all the time, you can make a lot more than the 4 to 4.5% per year with your own money on your own. You don't need to have some jerk sitting in a fat cat office in Wall Street making $2 or $3 for every dollar he allows you to make in your retirement plan.
That's right.
Retirement plans on average lose 0.5% to 1% a year to inflation. So you're not making any money. That's one of the best reasons to get out. And finally, freedom and liberty. Take control of what is yours. You should not have somebody else managing your money. They're a hired gun. They don't really care whether you make money or not, because they make money whether you win or lose. So you take control and direct your own investments, and you will do a whole lot better. And again, if somebody wants to talk to me, just call 561-753-5998, 561-753-5998, and make a phone appointment. I'd be glad to talk with you. So I almost made your 45-minute limit there, Dwayne.
Well, Dr. Tom, as always, a pleasure. Folks, give Dr. Tom a call. Visit cfrngold.com. Get yourself a starter pack. Learn more about investment-grade gold. Get to know Dr. Tom. And, of course, Dr. Tom, we look forward to talking with you again next week.
Okay, because next week, we've talked about why you should take the exit. I'm going to tell you next week how to exit with the least stress and the lowest financial cost to you. Okay?
That sounds good. I look forward to it.
Okay, God bless all.
God bless you, brother. Talk to you soon. Okay, back to the charts here for a minute, and then we're going to wrap this up. All right, so we talked about a potential ES long. However, we knew that fluid climbing could become resistance, and so we wanted to enter up at 41. Let me go to the alert channel. Okay, so the alert we put together here on the show live in real time was to consider being long 41.18 up to 41.20. The swing high was 41.14.75. Our idea is to be long 41.18 to 41.20 to 41.21. Now, because we knew this was potential resistance, and if it in fact did turn out to be potential resistance, which it did, that would be the market telling us that price was potentially going to retrace to the BBC. Price always reverts to the mean. In our case, the mean is green. As you can see, last night, price pulled right up here. And I even put out an alert last night. In the discussion group, not an alert, but in the discussion group. And if you're not tied into the discussion group, well, you're missing out. See, this was price last night rallying up here. Okay? Let me move this down. See how price climbed and climbed? We got price reverted to the mean. And then we consolidated at the BBC, just like we do at a WTZ. Okay? Blue and climbing became red and falling. And so when I published this post, I said, we have contact. And by that I meant we had reached the BBC. So do we immediately put on a trade there? No. We can't go long because we're still below the BBC. We only short below the BBC, but we can't short because we've got potential support here and potential support here. And so the next post in the discussion group, we have to overcome the step line and blue and climbing before getting short if resistance holds. Here we see that resistance held. Now this was posted at 10:15 p.m. Pacific, so that'd be 11:12, 1:15 a.m. Eastern. Okay, price found resistance at the BBC. And we're getting to the point where blue and climbing is just about ready to turn into red and falling. Okay, and that alert took us from here down to the weekly trading zone at 40.44, and I'll show you that particular alert. Yes, consider being short. 40.63. Let me just show you this. So the alert, to go along with the commentary that I was putting in the discussion group, is to be short 40.63, initial target 61, and then potential support at 57, potential support at 54, potential support at 51. And then the previous alert was still valid. So that's 1 target, 2 target, 3 target, 4 target. So from 63 to 51, that's 12 points, $50 a point, $600 per contract traded. And from our entry at 40.63, okay, see how red and falling just walked price right down to the weekly zone at 40.44. Now this $600 per contract move, 40.51 was the previous. Okay, now the previous ES alert was to be short 40.48 to 40.46 to the zone at 40.44. Okay, and that came in here, where it said the previous alert's still valid, 40.48 down to 40.44, which is a previous weekly zone, because this is this week's lowest weekly trading zone. Okay. And so then we triggered, so we had one logic alert, and then a second logic alert, and then we had the CTA trigger, and then price reversed off this bullish cross here. We headed up, we turned right at this old weekly zone, which should be yellow because it's an old zone, but I'll change it later. Ran up to this week's lowest weekly zone, pulled back, got below the trigger, caught a second CTA trigger. We've now pulled back again. Okay. Now we know we have an alert sitting up here. So what do we want to see happen? We want to see price get back above the CTA trigger. I want to see us get above this step line. So what I'm interested in is 4104 to 4106. So let's do that. Now we have an ES in the channel to be long at 4118 up here. So this is going to be one of those that says previous alert still valid. So this will be alert number 7402 ESM21. Okay, we need to get above the trigger, get above the step line. See, the swing high of this candle is 4107. So 4104 by 4104. Initial target 4106. And then potential support 4113. And then previous alert still valid. In other words, if price reaches 4113, then the previous alert, which is still valid and still in the channel, that will kick into gear. Let me show you once I copy it over. Okay, so starting out the show, we created this alert, 4118 to 4120, to the zone at 4121. Price, instead of punching up, we retrace to the BBC where we expect to find good support. We want to overcome these two obstacles here. Okay, the CTA is a potential obstacle at this point, and the step line. So we want to be able to trade this window of opportunity. Really, we got all of this right in here. So if price can get through the resistance overhead, take out 4104. 4104 is a trigger. Initial target 4106. Second target 4113. If price gets through 4113, then there's an obstacle. If price overcomes that obstacle, then 4118 to 4120 to 4121, that's still valid. Okay, so when you see previous alert still valid, that's what that means. It's an explanation of that terminology and what it means when you see it. So we've got this window, and this window. Should price fail here at resistance, break below the BBC, There's actually a window of opportunity here. This is potential support, and then if we could trade this window, roughly 40.78 down to 40.72. If we get through that support, then 40.56 down to 40.46. It's about a 10-point opportunity. So the market will give us something to trade. We just have to be patient, exercise self-discipline till the high probability opportunity presents itself. Now, if buyers don't kick it in gear here pretty quickly, if we go sideways another candle, this red and falling is going to dip down into our window. And even if price overcomes the step line and overcomes the CTA, and we're powering it up, red and falling, it's a high probability that becomes resistance. If price can get through that resistance, now the further red and falling drops before we trigger into this trade, the less desirable this window of opportunity becomes. If buyers will again punch, they've got 28 minutes left in the life of this 30-minute candle. Is that enough time for buyers to put the pedal to the metal, overcome these two obstacles, and get the initial target up to the second target? Yeah, that would be beautiful. That's how it would play out in a perfect world. Okay. Now we had a number of things in the course of this session that did play out as if we were in a perfect world, but you can never count on that. All right. So that's where we stand on the ES. Keep forgetting I got everything on one tab now, or I've got everything on one screen. So the Dow, okay, the Dow, we're still waiting for a move. Our Dow alert overhead is 34,020, which is now. This is what I mean about, see, price didn't make the move here, and because of what's happened, I would be, this is alert number 7398, because market structure has changed, I would be less interested in that move right now. What I would be more interested in would be a move from 33,965 to 33,985. Alert number 7403. YMM 21. Serving long. At, let's go 33,970 to 33,990. 33,970. Target 33,990. And then previous alert. Still valid. Okay. And that was alert number 7,403. And buyers definitely got the pedal to the metal here. We've overcome the step line. The S&P is about to enter that window we just discussed. On the Russell, too close to do anything right here. The previous Russell alert was to be long 2164 to 2166, so that still stands. Okay, that's alert number 7399. That's still good as written. On the NQ, we were looking to be long 13184. 13184. That's way up here. Do we have an opportunity here? We do. Alert number 7404. NQM21. Consider being long 13090. With an initial target of 13100. And then previous alert still valid. Okay, and here we go. 130900 to 13090 to 13. We already made it to 99. Okay, so we're almost to the target, and then we've got another alert available overhead. There's also a window of opportunity here from 35 to 55, and that's not in alert form at the moment. So crude oil has not reached our window of opportunity down here. Gold is, I don't think did we put out an alert on gold? Let me look. You had to buy 1829 to 1830. It went to 1829.1, so that's going to be a stop out. Okay. We pull back to the BBC. We've got another chance to do it again. So I'm not going to put this out as an alert, but I'm going to suggest 1829 to 1830. No, I'm sorry, 1830. 1830 is a weekly zone, so we should have a line there. But we're going to pass on doing anything else with gold. Okay, and silver. Silver. Not going to put this out as an alert, but 2713 to 2716. That's 3 pennies, $150 per contract traded. 2713, 2716. And you've got an obstacle here, and you've got a window of opportunity up here. And that brings us back to a final look at the daily chart. Okay, S&P is halfway through that window of opportunity that we just highlighted. That last one was 4104 to 4106. The swing high so far is 4108. Okay, so we've already hit the initial target on the alert we just posted. 4104 to 4106. We're already at 4108. And we're looking for potential resistance at 4113, which is just below red and falling. Let's see if the Dow is making the move as well. Okay, the alert we just did on the Dow, 33970. Haven't got there yet. Haven't? swing high. 33964. Nope, not yet. So that one hasn't triggered as of yet. And then on the NQ, $13,090 to $13,100. We've already made it to $13,120. We overcame the resistance. Now we're at the next resistance. Then you've got a window of opportunity. Then you've got an alert in the channel. Crude looks like it's ready for another leg to the downside, but you've got potential support here, potential support here. We want to take out these lows, okay, and do something like 63 down to 62.80. Okay. Up. And on the daily chart, okay, this is the entire move up. 24% fib is down at 4,000. The last leg up, we bounced today off the 50% Fibonacci retracement of the last leg up. Give me 1 second. Okay. All right. So that wraps it. Good word for the day. Yesterday we talked about prayer can change your life. Today, preparing for greater things. Matthew 25:23. You have been faithful with a few things. I will put you in charge of many things. To succeed in life, you need thick skin when it comes to handling criticism. It's what separates those who say they want success from those who are prepared to pay for it. For example, if you've been praying for a mate to share your life, ask yourself if you're prepared for the sacrifice and responsibility that comes with marriage. Are you stable? Are you unselfish? Are you mature enough to provide for a family? Or if you're asking God to increase your business, are you providing outstanding service to your existing clients? Dolly Parton quipped, "A peacock that rests on its feathers is just another turkey." Sometimes we're in love with the image of success, but we haven't counted the actual cost of succeeding. It's a good thing God doesn't automatically give us everything we ask for. Often we want something because it looks good in someone else's life. But God in His wisdom knows that right now it would hurt us because we're not mature enough to handle it. God tests us with what we have in order to develop our consistency and strength. He observes how we handle the pressures that accompany the blessings He's already given us. He wants to bring us to the place where we're impervious to adversity, where we've learned to appreciate the giver more than the gifts. When we reach that point, we'll hear Him say, "You've been faithful in a few things. I will put you in charge of many things. Come and share your Master's happiness." Matthew 25:23. Those words will make everything you've been through worthwhile, and that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.